it is easy for analysts and for people in the media to blame everything that transpired on the Hunt brothers because they were there, because they were very rich, and because it's just the way the media works. They like to find a villain and pinpoint what is happening on that villain. And we all know that the media loves to hate billionaires.
Right,
It's
absolutely.
their, yeah, it's their personal hobby. So, but the true culprit was probably the government, as always, because it was the excessive spending and the fact that the US dollar was no longer backed by gold. This is what led to the inflation. This is what created the inflation.
Absolutely.
Yeah, and prices simply react to inflation. Prices do not cause inflation, prices react to inflation. When I first started reading about this case, I was quite surprised to discover that the conditions back then were very similar to what we're seeing today. Well, first of all, this was, of course, the beginning of the inflation, the great inflation of the 1970s. This was exactly when Nixon took the US off the gold standard in 1971.
Yes.
And inflation was beginning to creep up all throughout the 60s. But after the US got off the gold standard, it really started to pick up and it became a real problem, which everyday people started feeling in their pockets, whenever they went to the supermarket. And at the same time, it appears that there were also silver deficits, which is probably what got Bunker Hunt interested in silver in the first place. Because as he himself wrote, world production, mine production of silver at the time was about 300 million ounces per year. But the consumption of silver was 500 million ounces per year, which means that there was a shortfall, a deficit of about 200 million ounces per year, which is pretty similar to what we're seeing today. Eh,
Absolutely.
yes, and the thing is that the shortfall was covered by governments, the governments of the world, dishoarding their silver. Back then, since many countries used to issue silver coins, the governments of the world used to keep silver reserves. And after the US stopped issuing silver coins, other nations followed suit and also removed silver from their coinage and started selling their silver back into the market. And this is why the price of silver was quite stagnant, even though there was a huge deficit. So Bunker Hunt realized that the price of silver was probably too low, that there's eventually going to be a shortage, and that inflation was, acting in the background to push the prices of commodities up. So during the 1970s, he started investing heavily in silver. Now, when we look at the price action during the 1970s, the early 1970s, the price of silver indeed rose from about $1.50 per ounce in 1971 up to $6.50 per ounce in February of 1974. And then it had a correction. Now, does the date 1974 ring a bell to you?
Yeah, 1974. I'm sorry, I'm drawing a blank right now.
Well, 1974 is the year in which the petrodollar agreement with Saudi Arabia was signed.
Oh, of course.
As the dollar was no longer linked to gold, the US government looked for other ways, so to speak, to back it or to link it with the commodity sector. And the way they did it was through signing an agreement with the Saudi kingdom that the Saudis would sell their oil for dollars only. And this created the demand in international markets for dollars, but it wasn't enough to kill the inflation. After a few years of consolidation, the price of gold started to rise again. So the petrodollar agreement, it kind of tamed inflation for a while, but it wasn't enough in order to conquer it. It continued.
Yeah, thank you for bringing that up. Yeah, June 9th of 1974. And then, of course, the 50-year anniversary of that was June 9th, 2024. And it just so happens that they quit selling oil exclusively, US dollars at that point. Of course, there was a lot of information that there had been a contract that ended after a 50-year time period. Some people are saying that no such contract existed. But it just so happens, within a few days of June 9th, 2024, they quit selling US oil in that was denominated in US dollars. So pretty big coincidence, but I'll just leave that at that. So what were they buying? It looked they were started buying paper contracts for silver as well as physical metal. When they bought contracts, they were actually asking for delivery of these contracts as opposed to taking the cash settlement option, which is what usually happens with these contracts. According to Munnick's article, it's estimated the Hunts acquired about 37,000 1,000-ounce silver bars in this time period. Now, these are big numbers, but were the Hunt brothers acting alone or were they being sneaky about these purchases? And were they really cornering the market?
Yeah, so according to my figures, at the height of their acquisition, they amassed roughly 100 million ounces of silver. Most of it, about two-thirds of it, they actually took delivery. That means they indeed purchased futures contracts at the COMEX in New York, but they weren't just interested in some short-term transaction. They weren't in it just to make a quick buck. They actually stood for delivery. That's one thing that indicates that they weren't trying to manipulate the market. This was a long-term investment as far as they were concerned. Also, people who try to corner the market are usually quiet about it. They don't advertise it, to other people. And the Hunt brothers were quite vocal about their position on silver. And they told everyone who was willing to listen that they're investing in silver because they were hoping that others would join them. So that's another indication that this wasn't just, some quick attempt to exploit the futures market. This was a long-term position. And
That's a good point.
and when you start reading about their ideology, you understand why they chose this course of action. They were the original stackers.
Right.
They came up with the idea of a silver squeeze. They were concerned about inflation and they were concerned about the dollar becoming a fiat currency. Bunker Hunt said that he was concerned, I'm quoting, about the political instability, the civil turmoil, the financial catastrophe of hyperinflation, and moral bankruptcy. Okay, so even back then, they were concerned that the policy of the federal government and the Federal Reserve would eventually lead to a hyperinflation, just as we are concerned today. But they were also concerned about the moral bankruptcy of the American public. So,
That's really interesting because you had brought up moral bankruptcy previously. One way to look at it is they were just really far ahead of the power curve, that they saw everything coming that everyone's concerned about today. I think when they are investing in the precious metals, and they were not trying to keep it quiet. That's another thing that stackers do. They encourage others to join them. They were encouraging others to join them. So I think that those are some pretty strong similarities that you pointed out.
yes, and they were hoping that what they were doing would eventually lead to silver being remonetized and used as money again. This was what they were aiming at. It was their assumption that the dollar would eventually collapse and that people would go back to using gold and silver in everyday trade. And since gold would probably be too expensive, then they would need silver coins. And they intended to be the bank, the source of that silver for everyday commerce.
That makes sense. And that was smart of them to go for that angle. So let me ask you, well, I guess I'll say this. Many say the peak for silver was artificially high because of the Hunt brothers having a significant position, of course, in paper silver as well as physical silver. Without the Hunt brothers' participation in the silver market at that time, do you think there still would have been a spike for the price in silver like there was for gold? Or, what other factors might have impacted the price, and how significant were the price swings in that at that time?
Yes. Um, it is my theory that this price spike would have happened anyway because there was inflation at the time. The price of gold was rising. And as we all know, the price of gold and silver are highly correlated. So it stands to reason that silver would have followed gold at some point. Now, I think that the Hunt brothers merely pushed silver in the direction that it wanted to go anyway.
That makes sense.
Yes, and you know, it is easy for analysts and for people in the media to blame everything that transpired on the Hunt brothers because they were there, because they were very rich, and because it's just the way the media works. They like to find a villain and pinpoint what is happening on that villain. And we all know that the media loves to hate billionaires.
Right,
It's their
absolutely.
yeah, it's their personal hobby. So, but the true culprit was probably the government, as always, because it was, the excessive spending and the fact that the US dollar was no longer backed by gold. This is what led to the inflation. This is what created the inflation.
Absolutely.
Yeah, and prices simply react to inflation. Prices do not cause inflation, prices react to inflation.
Yep, that totally makes sense. And it's so easy for them to make a scapegoat out of these billionaires that are famous. And of course, the government gets off scot-free. It wasn't their fault that any of this had taken place. It's
Yes.
all the Hunt brothers.
Okay, so now the true action begins because all throughout the late 1970s, the price of gold is rising, but the price of silver is still in a prolonged consolidation. And then in late 1978, it starts breaking out. And the Hunt brothers, they start, really investing heavily. They are dominating the trading floor at the comics at the time. And so the price rises. By summer, it rose to about $9.50 per ounce, which, if you think about it, that's about a 50% increase, similar to what we've seen in silver since the beginning of 2024.
Oh, that's a good point. So they
Yeah.
were at like six and a half or so, and then they got up to nine something.
Yeah, from around 6.5 to 9.5. And then during the summer, there was a small correction, but then it starts, really picking up pace. By Labor Day, it reaches $11 an ounce. Now, you have to understand that all the while, there were massive shorts. Just like we have today, there were massive shorts at the COMEX. And in hindsight, we even know that some of those shorts, who were naked shorts, were some of the members of the commodity exchange itself.
Oh my gosh.
So the people of the Commodity Exchange of New York and the Chicago Board of Trade were betting against the Hunt brothers. So it is no surprise that the rules began to change and they started raising the margin requirements. Now, as we all know, you can buy silver futures contracts on margin. This is a form of leverage. That means that you put down a rather small amount of cash to buy such a contract. And what the commodity exchange started doing is raising that margin requirement. It started at around $1,000 per contract, and gradually by the end of 1979, they would raise it all the way to $75,000 margin requirement for a contract. Now, what it does, it forces you as the holder of that contract to bring more money, to pay more money just to stay in your position.
That's a
Go ahead.
ridiculous increase from 1,000 to $75,000.
Right. And that, by the way, that represents the full 100% value of a 5,000 ounce contract at $15 an ounce.
Right. So you went from being able to use very little leverage to needing to have the full true price.
Yeah. They went from being able to use leverage to almost not having any ability to use leverage at all, which meant that they had to somehow raise cash all the time. But the price kept going. In October, it went to 15 or $16 an ounce.
From 11.
Yeah, this is all happening in a very short span of time.
Yeah, that's just, so just a few months later.
Yeah, so the commodity exchange is raising the requirements, but the price still goes on and on and on. And okay, by the end of the year, it reaches $50.35 an ounce on an intraday basis. This happened on January 18th, 1980. And important to note that this was a Friday. As we all know, things tend to change over the weekend for some mysterious reason.
Yeah, we're not sure how uh, coincidental it is. That's when the paper trading markets closed. There might be something to that.
Yeah, well, I'm guessing that on that weekend, after the price reached $50 an ounce, there were some people at the exchange and at the CFTC and perhaps at the Federal Reserve or even the federal government, which had a conversation and decided to stop it right there, right now, and change the rules. And over that weekend, they changed the rules so that there could only be liquidation. And when the exchange reopened on Monday, January 21st, the new rules said that only longs could sell and only shorts could buy. And you could also not stand for delivery of physical silver. In other words, this means that they forced the liquidation of all the positions.
Absolutely. And I mean, and that's outrageous rule change to make over the weekend.
Yeah, that's outrageous for a number of reasons. Well, first of all, because it contradicts, the free market, the idea that you're free to buy and sell, and that other people, from the wider public, they should have been able to join in. But the commodity exchange didn't allow other members of the public to join the action. And even if the Hunt brothers had more cash, they couldn't buy any more long contracts. They could only sell them.
Right. They completely changed the game.
And also, we have indications that not only members of the COMEX itself were short, but also members of the CFTC, the regulating body on behalf of the federal government. They went short themselves.
That's ridiculous. I,
Yes,
I almost
because
feel like there should be some sort of rule against them shorting
yeah,
commodities at the
definitely.
commons.
Because they knew for certain that the price is going down. The moment the market reopens on Monday, January 21st, the price is going to go down because they're forcing it down. So it was a sure bet.
Talk about insider trading.
Yeah, this is the worst case of collusion you could possibly imagine.
Yeah, that's pretty outrageous. Considering they're able to change the rules on a whim and they can take out short positions that could potentially be based on rules they just changed themselves, that just seems like that should not be legal.
Yeah. And what's interesting to know that the price didn't collapse immediately. It retreated to the 30 to $40 region. And for a while, it had support around $30 an ounce. And the Hunt brothers, they lasted. They didn't liquidate their position for a while. But then, as the month of March arrived, the price began to collapse, falling during that month as low as $12 an ounce. And during that month, we had what we call Silver Thursday, in which the price truly collapsed. They had the largest single day drop. And this ushered in a 20-year-long bear market in silver.
Started on March 27th, 1980. So it's estimated that the Hunt brothers lost about 1.7 billion in silver.
Right. And the media, of course, portrayed them as the villains. The media tried to peg the entire run up in the price of gold and silver on them, trying to portray it as though it was completely artificial. But we know that there were good reasons for the price to rise. It wasn't just, some kind of a manipulation at the futures market. The public was losing faith in the US dollars, and it's almost certain that the federal government was acting behind the curtains in order to shore up the dollar, and that this was probably a coordinated action to raise rates on one hand, give people an incentive to invest their money in bonds again, and on the other hand, to smash the price of gold and silver so that people become fearful of owning them. And this gave the dollar a new lease on life, as they say.
Absolutely. It totally extended it for them. And you know what else is interesting is the propaganda that had been put out by the media in that time period about the Hunt brothers. It is stuck to this day. I mean, most people, if you bring up the 1980 silver high, the first thing they're thinking is, oh, it's because the Hunt brothers cornered the market. And I mean, maybe to some small degree that they affected it, with their attempted squeeze, but the reality is this was going to happen.
Yes,
There
this
was a
was
lot of
probably
short.
going to happen anyway, perhaps more slowly, perhaps to a lesser extent, but this was going to happen anyway. They were probably only pushing the price in the direction that it wanted to go anyway.
Absolutely. And I think the blow off top for gold at the same time really speaks to the market was heading this direction anyway.
Now, I want to mention the sad part. Even though the Hunt brothers were forced to liquidate their position in the futures market, they still had a huge physical position in silver. They lost about 30 million ounces, but they still held on to 63 million ounces of silver physically. And the sad thing is that Bunker Hunt still believed, even after this debacle, that inflation would continue, that the price would rise again, and that eventually he will make a fortune on his silver investment. And little did he know that inflation was over, that the price of silver would grind lower and lower for 20 years. And I believe, this was a great heartache for him.
Yeah, imagine sitting on 63 million ounces of silver and you know the fundamentals are there and just watching them just grind it down over the years like that. Yeah, that would be painful.
Yes, that was extremely painful for him. And we don't know when or at what point he sold that silver. I'm guessing he had to liquidate that position because in February of 1985, the Hunt brothers were sued by the CFTC for allegedly manipulating the price of silver. And in September of 1988, they were forced to file for bankruptcy under Chapter 11 due to the various lawsuits against them.
That is brutal.
Yeah. So not only did the CFTC force them to liquidate their positions, not only did the CFTC take, the other side of the trade by its own members going short, they also sued them. They also went after them. And it took them almost an entire decade to settle the case. In 1989, in a settlement with the CFTC, Nelson Bunker Hunt was fined $10 million and banned from trading at the commodity exchange.
Dang. Could you imagine losing that much money and then having almost the entire next decade you're getting drugged through the courts, not knowing what the outcome of this is going to be the whole time your investment in silver is just going down and losing money. And then
Yes.
you end up get losing at the end and getting
Yes, and
fined
in
10 million.
addition, he also had to pay millions of dollars to the IRS for
Oh my gosh.
taxes and fines and interest.
Dang, that is a sad ending to the Hunt brothers story.
Yes. Well, we have to
But
point out, they were still rich. They didn't lose all their money. So, I wouldn't shed too many tears for them. They stayed rich. Uh, they had other businesses, but it truly was, very, very painful for them.
very unfair the way that they were treated.
Yes, I see them as the patsies. I see them as the way in which the federal government, they it found a way to blame the inflation on someone.
I think you're totally correct. They were totally scapegoated in this situation.
Yes. And at the time, they were absolutely shocked by those rule changes at the COMEX. They didn't believe that such a thing could happen. They were under the impression that they were living, in a free country with a free market. They didn't realize that, if you mess with the wrong people, then suddenly, all these rules can be changed overnight, just like that. Because even though they themselves were, they were rich and powerful, but they messed with powers even greater than theirs.
Right. And that's a big lesson from this. Um, when you're investing in the paper market, you never know if they might change the rules.
Yes. And this is the lesson that we need to learn from the case of the Hunt brothers. I think that their greatest mistake was using leverage because using margin accounts, buying futures contracts with margin is a form of leverage. Yes, you're able to
Absolutely.
pay a small amount of money and command, 5,000 ounces of silver, and it is enticing. It is very tempting to use leverage when you believe that the price can only rise. But of course, just as leverage works in your favor when the price is rising, it works against you when the price is falling. And then you get a margin call from your broker, for instance, asking you to send more money. And if you've used all your liquidity, if you've used all your cash in order to open that position, then you're in trouble. You're forced to liquidate it. Even if you still believe that the price of silver is bound to rise, you have to liquidate your position. And this is why we always say that those who use leverage are the weak hands.
Right. They're going to be forced out.
Assuming that there is volatility, that the price is rising and falling very rapidly, they can be forced out of their position. And
Right.
this is why we advise people to only invest in physical silver, only hold the real stuff. Because when you're holding physical silver without any kind of debt, then it's very difficult to take it out of your hands.
Absolutely.
And
And
if the price, for instance, if the COMEX opens on Monday and the price drops by 20%, it doesn't affect you. You still have your silver. You can endure a rapid correction.
yeah, you took some of your savings, from working, or your investments or whatever it was, you kind of flash froze that. Of course, there's some movement in the markets, of course. But it's out of the system. There's
Yeah.
no counterparty risk on it anymore. If you didn't take out leverage to buy it, you've completely pulled this wealth preservation asset out of the system.
Yeah. It's out of the hands of the commodity exchange. They
Yes,
can't affect
absolutely.
you. They can play with the price, but they can't
Yep,
take your silver away.
exactly.
So this is why this story is a cautionary tale. This is why we implore, the public, just buy physical and don't use any kind of debt, any kind of leverage. This way they can't take it away from you.
It's yours free and clear. And when the time is right, you'll be able to take advantage of that. Don't invest in paper contracts at thinking it's going to offer you the same benefits that physical metal will.
Yes. And I wanted to end this discussion by explaining or trying to argue why this time is different. Why this time around we do have a chance to squeeze silver.
Yeah, I would love to hear your thoughts on that.
Well, first of all, the governments of the world no longer have any silver to this hoard. This trend ended around 2013. That was the year in which the governments of the world ran out of silver to sell into the market. So that was like this continuous stress on the price of silver
There's this
that,
excess supply coming into the market, and that wasn't that
yes,
long ago. So just 12 years ago.
yes, because they continue to sell silver in the market continuously all these years. And it pretty much ended in 2013, where pretty sure that they don't have any silver to sell. That's one thing. Another thing, another element to the puzzle is that, during the 1970s, early 1980s, both China and Russia were behind the Iron Curtain. Yes, of course, under communism, the citizens of these countries were not able to accumulate wealth and they couldn't invest in gold and silver. So now, today, we have a far larger number of potential investors. There are far more people who are able to buy physical gold and silver and impact the market this way. And also, as we're seeing today, the governments of these countries, they are also significant players in this market. So back in the day, you had a handful of investors, yeah, the Hunt brothers and some of their associates, as though playing against the US government. And today you have far more investors, you have powerful forces such as foreign governments. It's as though the army of silver stackers is far larger today.
Yeah, way more potential retail investors. They could
And
make all the silver disappear really quick, all the retail grade silver.
yes. And one last point that I want to make is that the US is in a far worse position than it was back then. Back then, although we had inflation, but the debt to GDP of the United States back then was only 25 to 30%.
Not bad.
Yeah, it was very low. So It had the ability to raise interest rates to 20%. It could endure that kind of an interest rate. Today, with over $36 trillion in debt, the US government can't even sustain 5%. And we're seeing that the current interest rate is already threatening to bankrupt the federal government. So the US government, as though, doesn't have the firepower to fight the silver squeeze anymore.
Yeah, they are out of ammo. And so
Yeah.
if a lot of retail investors start to pile into this space, plus their mine supply is not going to be able to pick up quickly, silver squeeze could really happen.
So I think the Hunt brothers affair was as though the first skirmish in a war. And the second battle was, in 2011, when the price of silver reached $50 once again. And I think that, as they say, third time's a charm. So
That's
this
right. I
is,
like the sounds of that. Third time's
yes,
is a charm.
this is our third attempt to break through that legendary $50 an ounce price. And I think that third time's a charm. So I think that this time we will be able to push through it, and the price of silver will rise to new highs. This could take a few years. I want to be cautious. This could take some time. The price
Sure.
could, yeah, the price could rise to $50 and then, consolidate around $50, or it could just, pass $50 and then they retreat back to 50. So there are a few scenarios that we can imagine, but I think that eventually, in a matter of a few years, we could see silver trading for well above $50 an ounce. Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.